All righty, we are live. Happy Saturday to you, Matt Terrio, CEO of Epic Real Estate. Good to see you all. Um, I just got compelled. I was sitting in front of the TV. I was watching Tiger Woods and Charlie, his son Charlie, who's only 12 years old, play golf, and having a great time, having my mimosa. And then a package arrived, and what happened was got a Christmas gift from PropStream. So I got this really cool hat, and so I thought I'd wear it on the stream today. And I just felt compelled and inspired to jump on here and show you my favorite way to use PropStream of how I've gotten seller finance deals right off the multiple listing service with 0% interest. So I'm going to show you how to do that. And if you'd like to get free access to PropStream, you can get free access for 7 days. And so you can copy and do exactly what I'm going to show you how to do. You can actually pull the list off for free and do this exactly the exact same thing that I'm going to show you how to do. And you can do that at propstreamepic.com. I went ahead and I put a little link down in the description for you, propstreamepic.com. And then just before we begin, also, I've got a great Christmas promotion going, something I've never done before. I always teach people how to, that if you got to find the deal first. If you find the deal first, the money is really easy to find. And I've shown people that over and over and over again. And sometimes, though, if you are new to this and you've never done a deal before, that can take a whole lot of faith to really embrace and trust that process. So what I've done is I made arrangements to get you the money right up front, so you don't have to worry about the money. And so you've got 100% financing for your fix and flips specifically. There's some other great programs as well, but you get 100% finance to go out and they'll give you the money to find the property, and they'll give you all the money to rehab it. And I'm giving that away for free with our Christmas sale. And with the Epic Invested training, it's 80% off. So if you go to epicChristmasgift.com, then you can take a look at the details there, right? epicChristmasgift.com. All right, let me show you how to use, or how I use, my favorite way of using PropStream. Now, I found these amazing seller finance deals on the multiple listing service. So I'm going to come right over here. And so this is PropStream if you know what it is. And follow along. So I'll just give you an example from my city, and I can do a couple other cities. If you have some requests, go ahead and type them there in the chat box, and then I'll go ahead and pull your cities up too, but I'll walk you through the whole process right now, and then we'll go from there. All right, so I'm type in Las Vegas, where I'm at. Las Vegas, Nevada, by the way, not in Las Vegas, New Mexico. Did not know there wasn't Las Vegas, New Mexico, but apparently there is. So what I'm doing is, you can see right here, if you don't have access to the multiple listing service, PropStream will give you that access in most markets, and almost all of them. There's some little quirkiness from county to county, just based on the multiple listing service that's there and whether they cooperate or not. But pretty much, I would say 99% of the country full access to the multiple listing service. So you can see there's 15,182 properties on the multiple listing service in Las Vegas. And then you can see there's foreclosures, 1,543. There's 150 properties in auctions. There's 100,000 plus bank owned. There's 5,800 properties here with liens on them. There's 12,000 vacants, 370,000 high equity properties. But I'm just going to focus on the multiple listing service right now. So this is what I do. This is where I start. I click on the multiple listing service. So that narrows it down to the 15,000. Then I'm going to dive down a little bit deeper in more detail. I'm going to go over here to the property characteristics. I'm looking for single family. And then I'll come over here to the MLS status. And I'm going to look for on market. I want the actives. And then now here's what I'm going to do right now is I'm going to come over here to the days on market. And I'm looking for the properties that have been on the market for at least 60 days. That's what I'm looking for, because we're in a really hot market right now. And I imagine we're going to be for, I think, a couple more years at least, probably several years. But we're in a really hot market right this moment. And we have been for the last couple of years. And this is the strategy I've been doing. And so I'm looking for a certain level of motivation. So if we're in this hot market and you've got your property listed on the multiple listing service, and that property's been sitting there for 60 days, you're probably getting a little bit impatient. And like, why is everybody selling their house in days? And it's taking me 2 months to sell mine. So there's something going on there. Not always, but that's a good indicator that there might be. And that's all I'm looking for. I'm just looking for, there might be some motivation there. And I'm going to go ahead and approach that. And so the other thing that you want to understand, and I know this from as being a real estate agent when I got started as a real estate agent for 3 or 4 years, about almost 5, I guess, 4.5 years. And I know when you have a listing and you're sitting on that listing and it's not selling, the real estate agent becomes rather motivated as well. So you kind of get 2 for 1 as far as the motivation goes. And so what I've looked for is properties that have been on the market for 60 days or longer, right? And then, so as you can see right over here, I've got 3,321 properties. Let me show you right over here. 3,321 properties on the multiple listing service that fit that criteria. Then I'm going to come down here into mortgage info, and I'm going to look for the ones that are owned free and clear. Okay. So on free and clear, I've got 946 properties that fit that criteria. So what I do is I print out this list and I give it to my real estate agent. And my real estate agent is now going to write offers on all of these properties on my behalf. I gave him full authority. Here's my DocuSign. Just go ahead and sign them and send them out. And I give them a very specific criteria of how to do this. And let's see, what should I'm going to switch to my desktop camera here in a second. So I'll tell you about working with real estate agents. Let me tell you that really quickly first. Is that sometimes finding a real estate agent that will do this with you and work with you in this capacity, it can be almost as challenging as finding a motivated seller themselves. You got to find someone that's a little bit hungry, a little bit open-minded. They're willing to do the work. They're willing to get a little dirty. They're willing to make some phone calls and write these offers for you, because it's a lot of paperwork. And most of these things are going to get rejected. Almost all of them will. I think we're probably averaging about, I don't know, I'd say 1 out of 100. We probably get counter offers out of 3 or 4 out of 100. We get 1 deal out of 100. So they got to write a lot of offers. So I'm looking at this right now. Now I've already written offers to all these properties. So that would, based on those numbers, I would actually reduce the value, because in our model, these $1 million houses aren't going to fit. So I'm going to come right back over here to valuation equity. Actually, let's go to the multiple listing service, and I'll just take listing amount. I'm going to say the max. This strategy kind of breaks down right around $650,000. So I'm going to say $700,000. Okay. What does that leave me with? Okay, so that still leaves me 746. So that's about right. And there's a few new ones here since I haven't been really working that hard in the last couple months. But we'll get right back on this at the beginning of the year in the spring. But so out of the last 2.5 years, we've written probably 800 offers, and I think we got 6 deals out of it. Okay, so here's the actual criteria that I'm going to give him. And let me switch over my camera so you can see this. All right, so you should see that, and then I'll go ahead and turn this off so you can see this nice and big. All right, there we go. Okay, so here's the criteria. I tell my agent, make sure I can hear the microphone. Tell the agent, offer. You're going to go through all 700 of these properties. You're going to offer full asking price. Full asking price. So I'm not even going to ask for a discount, because as real estate investors, we want to make our offers in one of 2 ways. We want to make our offers so that we get the price and the seller gets the terms, or the seller gets the price and we get the terms. As long as we can control one of those, we can always create a deal for ourselves. So I'm going to give the seller the price. That's typically what's most important to them anyway. So I'm giving them full asking price. I'm going to offer 10% down. And then I'm going to do 100 payments of whatever half the market rent is. Okay. Half the market rent. And then on the 101st payment will be balance due. So that's the offer. So based on what we have here, if you look up here in the right-hand corner, we've got 746 of these properties, right? So my agent is going to go out and write 746 offers for me. And it'll take him, that would probably take him 4, 5, maybe 6 weeks. And here's why. Because it's very specific on how you have to do this. What you have to do is the agent themselves has to go and call up the listing agent on these properties. Okay, so he's going to call the listing agent on these properties and going to say, they're going to connect agent to agent. Hey, I saw that you had this listing on the market. I know I'm an agent too. I know what it's like to have a listing sit around for a while, especially in this hot market. I'm sure that you're tired of holding the house open and spending the marketing dollars. And I'm sure that the seller is blowing you up and asking why you haven't sold their house yet, right? And so they're going to make that connection and kind of remind them of the pain and the situation that they're in. And then my agent says, I've got a full price offer coming over to you, and it's a legitimate offer. It will close, and you will get your full commission, but it is a little bit unorthodox. And so I'm going to send it over, take a look at it, and I'm just going to ask that you would present it to the seller. Will you do that for me? So what I've done there is I've let them know that they got a full price offer. It's going to close, and they're going to get paid. I want them to know that. But it's a little unorthodox. Will you at least just present it to the seller and just get that confirmation? Because what a lot of agents do is they'll just start faxing these things over. They'll start emailing these things over, and they get rejected right away because the agent will look at it and has no idea what it is. But if you remind the agent that they're going to get paid, right? It's a full price and it's going to close. Remember, they've already sitting on this property. They've been sitting on it for 60 days. They don't have anything better. You're the best offer in town at that very moment. So that has to happen. That call has to happen between agent to agent before we send over the offer. All right. So they send over the offer, and all I'm really looking for is I'm just looking for a counter offer. I want to find a seller that's at least open to this idea of seller financing. And like I said, we probably get about 1 in 100 or so of these accepted. We probably get 3 or 4 counters, but most people, they say no. So when you're having this conversation with your agent, you want to tell your agent you're going to get a lot of no's. Most agents are going to reject this. Most sellers are going to reject it. So, but I know we're going to get 1, we're going to get 2, we're going to get 3, we're going to get 4 if we do this enough. And we don't need to get a whole lot of these accepted for us to make some really good money for ourselves. And so you have to have that conversation with the agent up front. That's absolutely paramount. Okay. So we send that over, and, I've gone through probably, I don't know, I would say probably 7 real estate agents, because they get burnt out. They get tired. They don't have the sticking power like you and I do. They don't have that entrepreneurial spirit as strong as we do. They don't have the appetite or the tolerance for rejection. Even if you tell them they're going to get rejected up front, they still get burnt out. So, but I've got one now, and we're kind of solid now, and they're constantly writing these out. And so I've gotten, in the 2.5 years, we've got 7 of these, 6 of these accepted. Okay, so 6 of them. So, and I will do these all day long. Hey, Chris, good to see you. And then Christopher, good to see you. WL, good to see you too. All right. So if you have any questions about this, go ahead and type it in the chat box, and I'll make sure that I get to them before I sign off today, okay? But let me show you why this is so amazing to get these accepted, and how much there is for this, and like why you might want to go ahead and just write hundreds of offers every single month, and why it would be totally worth it. Okay, so let me break that down for you real quick. I'm going to go back over to my desktop camera for you. All right. So again, here's the criteria that I give to my agent. Full asking price, 10% down, 100 payments of whatever half the rent is. And that rent is actually written inside of the, it's in PropStream as well. So you'll know what the market rent is. So they get access to my account. And then the 101st payment is full balance due. And if you'd like to get full access to PropStream, you can go ahead and just look at the link down below. It's propstreamepic.com. All right. So this is why this is so amazing, because with real estate, you've got 4 major profit centers. And I call this the ROI Matrix. Okay. Let me show you how this works. The first profit center is going to be the appreciation, right? That's what most people know. So if we look over, I'll just take any random property here and we'll use it as an example. So I'm just going to scroll down here. Let's just take this one. Okay. Diamond Creek. Okay, so this one here, let me see if I got a different color pen, it'll be easier to see. So in this example, full asking price. So on this one, we'll go to the multiple list, the MLS details. Listing price is $2,900. That's weird. This must be a rental that's mismarked. So let me pick a new one. How about this one? I didn't check out any of these in advance, and this is sometimes the things that you'll run up against as you're doing this, but here we go. All right, so this property, 8358 Vinamala Avenue. So list price right there on the left is $515. So they're going to offer $515 full price. So 10% down, it's going to be $51,000. Okay. It'll be $51,500. And then half the rent. So our rent right here, this is just our starting point, right? So half the rent there is $1,989. So we'll say basically we're going to give them $1,000 a month. And then the full balance due on the 101st payment. Okay, so this is why this works so well, or why you'd want to do as many of these as you possibly can, how you can pay full price for a property and get accelerate your wealth exponentially and get great cash flow also. So appreciation, if we took appreciation of say 3.5%, is kind of the average of what real estate appreciation has been for, I don't know, for the last 20, 30 years. So we're going to take 3.5%, right? I'm going to take that 3.5% of our 515. So I'll do, hold on, my light's on. There we go. Okay, so we'll take 515,000. Make sure you guys can see that. I can't see what you're seeing. Let me do this so you can see it. There we go. Okay, so 515,000. I'm going to multiply that by 3.5%, right? 0.035. So that's going to be an appreciation of $18,025. So I'll take the $18,025. Now, to find out what my ROI is there, I want to divide it by, what do you think I divide it by? Do I divide it by the price of the property, or do I divide it by the down payment? You divide it by how much money you put into the deal. So I put in $51,500. So I'll divide that by 51,500. So divide it by 51500. That gives me, that's 35%. So just on the appreciation in the first year, I'm going to get 35%. That's pretty much, you can pretty much count on that. Hey, Patricia, good to see you. I'm glad you made it. Good to see you. All right. So next, our next part of our project planner, we're going to do the cash flow, right? So our rent here for this property was $19.89 is what it was. Okay. Then, so what we do is for our quick and dirty math, just for this example, I'm going to take 60% of this, because what I'm doing is 40% is going to be taxes, insurance, property management, maintenance, and vacancy. Okay, so you get all of those. So I'm going to take out 40% to count for all of that. So I'm left with 60% of this. So that's 1989 times 0.6. So that's 1193. And then I have to subtract my payment, right? So my payment is $1,000. So minus $1,000. So that's $193 a month in cash flow. So I'm going to multiply that by 12. That gives me $23.20 for the year. So that's $23.20. And then I'm going to divide that by how much I put in the deal. So divide that by $51,500 divided by 51500. And that gives me 4.5%. Okay, so not a great cash flow, but that's okay. But I've got 35% here and 4.5% there. So I'm at 39.5%. Right. So next, we're going to go ahead and look at the deductions. So we got the deductions here, and this is what the IRS gives you. So what the IRS code will give you is a tax deduction based on the natural wear and tear of a property. All right. Hey, Anna, how are you? Good to see you. I'm glad you made it. If you guys have any questions, by the way, go ahead and feel free to type them in, and I'll make sure that I get them all answered before I go. Okay. And then if you like what you're seeing, go ahead and smash the like button for me. I really appreciate it. All right. So the deductions. So it's not deductions, it's the depreciation is what I'm doing. Sorry about that. You get the deductions as well. That's additional ROI, but I'm just talking about the major ones. You can't really see that, but that says depreciation. So the depreciation, the tax code says you can deduct or depreciate your property for 27.5 years. Where they got 27.5, I don't know, but that's what the IRS code says. And then the IRS says that what you're depreciating is the property, or excuse me, the building itself. You can't depreciate the land. So you have to take 80% of whatever you paid for the property. So if we took 515 is what we paid this property, I'm going to multiply that by 80%. Okay. So I've got $412,000. I'm going to divide that by 27.5 years. That's what the IRS says that we can do. We're going to divide that by 27.5 years. So that's $14,980 a month, or excuse me, a year that I can deduct. But now I have to go ahead and multiply that by whatever my tax bracket is. So that's going to be a little bit different for everybody. But I'm just going to use the middle of the road, 33%. So I'm going to times that by 0.33. So that's $4,940 or $44. So $4,944. Now, that's not necessarily income, but it's money I don't have to send to Uncle Sam, right? So now to figure out that ROI, I'm going to divide that by our same $51,500, the money that we put into the deal. Divide that by 51,500, and that gives me 9.6%. Okay, so now I've got 35%, 39.5%. And so what's 39.5 plus? It's going to be what, 68%, something like that? Hold on, my math is 39.5 plus 9.6. Yeah, okay, so we're at 49.1% return on our investment. 49.1%. That's big. Anybody's stock do that this year? Did your stock do 49.1%? Right? Probably not. If you did, congratulations, but probably not. Now, the fourth quadrant is our amortization. And for all my Latinos and Latinas, I like to abbreviate it as AMOR because I love this part. This is what makes this deal so exceptional. Okay. So the amortization is the paying down of the debt, that making that monthly payment to the seller, and it's how much of that is applied to the principal. Well, because we offered 100 payments of half the rent, so $1,000 a month, we did not offer an interest rate here, as you can see. So this is fully applicable to the principal. So $1,000 times 12 for the year, that gives me $12,000. So that's my return there. I'm going to divide that by my $51,000 divided by 51,500. So that's another 23%. So you can see right here between the 20, if you add all four of these ROIs up, this is a 72% return deal. So this is why I really like this deal, and I'm very patient with it, and I'm willing to write a lot of offers on it because I've got 72%. And I don't know where you can get 72% in real estate or really in the stock market with only a $51,000 investment down. It's going to be really super high risk if you are even in the ballpark to attain this. But we know it's real estate. This is like the lowest risk, highest return investment that's available to the average person. Okay, so now the big question is, what typically comes up, great, Matt, but where do I come up with the $51,000, right? That's a lot of money. And I agree. Like I've got a good little cash reserve myself, but I can't do like 10 of these a year. I mean, that's a lot of money that I'd be having to come up with to do this, right? So what I do is on 51,000, now I can go out and look to my network, friends, family, associates. Would you be willing to split this with me? Excuse me, for $51,000. And so that would be what? 36%? Is that right? Did I do that right? 36 times 2. Yeah. So 36%. Of course, anyone in their right mind would do give you $51,000 for a 36% return. But I'm not going to give them that. I'm going to give them maybe half of that. So that could be an 18% return. Nobody in their right mind would turn that one down at 18%. In fact, most people will even do half of that, do it at 9%. And so you can leverage other people's money fairly easily when you have a deal like this under contract. And that's how I find the money. It all comes from private money. And so what that actually does to this 72% return is, because none of this money is mine, it actually makes it an infinite return for me. Because so I am getting this, where to go? I'm getting $2,300 a month, or excuse me, a year in cash flow. I'm getting $18,000 a year in my appreciation. I'm getting $12,000 a year in my my debt pay down. So just between these two, that's what, $30,000. My wealth is growing $30,000 a year just by that. And then I also got this great tax deduction here I don't have to send to Uncle Sam. So you've got cash flow and you got your wealth creation, and you only don't need to do too many of these deals a year. So if you pulled out this same list that I did, and went ahead and just started finding an agent that would work with you, you do 2 or 3 of those deals a year, and you're retiring pretty darn early, pretty darn quickly. All righty. So if you got any questions, let me know. I'd be more than happy to answer them for you. And if you want me to look at your city to see what the opportunities are there for you, you can let me know that as well. Just type that into the chat box that you see there. And then if you'd like to get free access to PropStream, if you don't have it already, there's a link down below, propstreamepic.com. It'll give you seven free days. And you can go ahead and punch this list up for your city, and then go ahead and just print it out, and you can get all that done right there inside the first 7 days very easily. Probably get it done in the first 7 minutes, really. So go ahead, and if you got something there, let me know. If you don't, that's fine too. And if you like what you saw, you like what you heard, go ahead and smash the like button. Make sure you hit the subscribe button while you're here, because I post stuff like this each and every week, and we're going to be doing it pretty much on a daily basis from this point moving forward, an indefinite period of time. And that is that. All righty. So again, thank you to PropStream for the nice gift. I got this is why I'm wearing this hat today, because it came in the mail, and it had a nice bow around it. And I was just sitting there watching Tiger, watching the PGA, and watching him play with his son, Charlie. It's remarkable. They look like one of the same as they're out there on the course. And I just felt compelled to, since PropStream did this for me, I want to do this for them and show you how cool their software is. And I didn't even use it to the full potential. I'm just showing you my favorite way of using it. All right. So Chris says, I see you doing the mechanics, but how do you know or determine the percentage for the numbers or for your spread? Is there a rule of thumb of an actual chart or system? Chris, I'm not sure if I totally understand the question, and if I missed something, go ahead and you can re-clarify, but I'm going to give it a stab. So how I determine the percentage for the numbers. So all I'm doing is I'm offering them full price. So my agent doesn't have to check with me. I just give them full price. The second part of the numbers is I'm always going to offer 10% down, 10% cash. And sometimes these go back and forth. Sometimes I have to give them a little bit more. Maybe it's 15% or 20%. And that's fine too, because all the same calculations still apply with the return on investment. And then as far as how the rent goes, so or what my payment is going to be, I'm going to take whatever the rent is, and I'm just going to offer half of that. So if I got a $2,000 rent and a $1,000 payment, I got $1,000 left over to work with. So it's a very basic formula that'll work for any house. And what's really nice about it is if you look across the country and you're trying to cash flow properties, you'll see that the 1% rule that most people use will kind of run its course right around 200 and 250,000 bucks. It used to be about 150, but we've had a massive run up in the rent here in the last year. So you can actually increase that percentage or that purchase price up a little bit more. But what this also allows me to do now is when you make this offer is I can cash flow $400,000 houses, $500,000 houses, $600,000 houses with the same formula. The formula doesn't vary whatever the price point is. Now, if you get up to 700, 800, $1 million houses, now you're asking them for it to take kind of a really low payment in correlation to what the purchase price is, or in proportion to what the purchase price is. So it stops working there a little bit, but at least you can double the amount of properties that you could potentially turn into cash flowing income and tax or cash flowing real estate. All righty. Again, epicchristmasgift.com. You can go check that out. I'm giving you 100% of your financing for your fix and flips for 2022. We're going to cover the purchase price of the property, and we're going to give you cover all of the rehab, and then you're just going to split the deal 50-50 with us. It's pretty simple. We got a couple of different cool little loan programs there that are kind of based on how good the deal is that you find, but that's all available, and give you all of the training for 80% off. The financing is free. So that's at epicchristmasgift.com. If you want to give PropStream a run and a test run, you can go to propstreamepic.com. You get it 7 days for free there. Alrighty. Let's see. Jay, can you check West Palm Beach, Florida? Absolutely. Let's do it. West Palm Beach, Florida. All right, there we go. Okay, so I know Florida is a really tight market. I don't know how big this city is, but we got 2,322 houses on the multiple listing service. So I'll go ahead and I'm just going to look at those. I'm going to come over here to the filter. I'm going to narrow this down to our on market, our actives, Days on market, we'll do 60 days. Right there, we still got 460 left out of those thousands of houses that fit that have been sitting on the market. Now let's go ahead and make sure that we're using let's look at single family, see if that reduces it too much. Okay, that brought us down to 157. Okay, so I imagine in Florida, especially along the coast, there's probably a lot of condos. And this will work for condos as well. So I've got us back up to 355. And now let's see how many of these are actually owned free and clear. You got 197 of them. So I bet there's at least two deals in there. Even if you just got one, it'd totally be worth it, wouldn't it? For a 72% return? Absolutely. So thanks, Jay. Thanks for asking. Hopefully that helps. Patricia, let's look at Long Beach. All right. That's where I got started as a real estate agent. That's where I did my very first deal as a real estate investor was in Long Beach, California. Was it 2501 Newport Avenue, right on the coast there? All right. So not many properties on the multiple listing service in Long Beach, but we got 900 to look at. We'll come over here. Property characteristics. I'm going to go for single families. Still got 345. What if I did condos too? Got 630 to work with. Let's check those out. I'll go to the multiple listing service, on market, active, 60 days. So that took us down to 111. So not a whole bunch down there, but you still got some. How many own free and clear? You got 41. There's 41 offers you can write. And you can keep writing those. Because if these properties have been sitting on the market for 60 days and they don't like your initial offer because it's this seller finance thing, in 2 more weeks, check in with them and send it over again. Send the exact same offer. That's what we're doing. We keep a little spreadsheet of all the offers that we send. We just keep on sending it. Okay. Cool. Let's see. Don't forget, the seller won't have to pay capital gain on the money they finance in the year that they sell. Yes, it's another great benefit. Absolutely. Very good. Jay, you are welcome. Absolutely. Patricia, you are welcome. Thanks, Chris. This is part of the creative financing, and that's all of these creative financing strategies are all inside of Epic Invest Ed. So if you want to go and take advantage of that at 80% off plus get 100% financing, you can go to epicchristmasgift.com. All right. Let's see. All right. The Doster Group. Let's look at Upper Marlboro, Maryland. Never heard of it, but let's give it a shot. Okay. Is it Upper Marlboro? Like that? Yep, there it is. It does exist. Okay, cool. All right, so right now there's just 363 properties, so it's probably a smaller city, I'd imagine, or a smaller area. Let's look at property characteristics. We'll go for single family, 149. If I did condos, it gives us 300 properties to look at to start with. Let's go to our multiple listing service status. There's 60 there. All right, we're going to look for the actives. So not too many there. We got 26 of them to work with. And if we go to the free and clear properties, let's see how many we got. We got 6. So pretty small city, but you could at least write 6 offers and then you can stick with them and keep sending it to them and see when they get accepted. And what I would imagine, and I don't know for sure, I've never been there. In fact, today was the first day I've ever heard of Upper Marlboro, a small area. And I'm looking, let me just zoom out a little bit here. Okay, so you're right outside of Washington. Yeah, it looks kind of like lots of grass and stuff like that there. What's the property price? Okay, these are like median properties, $400,000, $500,000, $300,000 properties. I bet you might get some takers in there for even just 6 of them. And if you followed up with them, I bet that you could turn that into something. And you just keep your eye on it and just wait for the new ones to, because if we looked at what's on the multiple listing service, and I kind of just took this away to 30 days. So we had 6. So there's 10 more. So there's 4 more that are going to be coming on the market, or they'll be hitting that 60-day mark here shortly. All right. So you could work that for sure. All right. You are welcome. Martinsburg, West Virginia. Let's check it out for sure. Martinsburg, West Virginia. Very good. Another small little area. We'll look at our single families, our condos. Go 60 days on market. Got 100 of them. 17, we got down really, really quickly, didn't we? Smaller area, and if we had any free and clear. Let's see, we got 12. So 17 of those, or 12 of those 17, we got twice as many as Marlboro had. So again, and then if we went back up here to 30 days, oops, what happened there? Status, we go to 30 days. So it's 25. So we got 12 more houses, 13 more houses coming that are going to hit that 60-day mark here pretty shortly as well. All right. And so let's see. You're welcome. Jade, for this strategy, yes, I am only looking for the free and clear ones. You could certainly add to like high equity. I mean, if I just went over here to, in Martinsburg, West Virginia, there's, high equity is pretty darn huge. There's a lot of those properties, and you could send these out as just blind offers as well. I've done that as well. Also, just using it as a marketing piece. We put signed contracts in an envelope and just send them on out. But this is the way that I can kind of leverage a real estate agent's time a little bit, and I don't have to do as much work. I don't have to do as much is conversating and negotiating and everything. I just kind of let the agent do all that. And one thing I will do, because here we've got 700 of those properties, right? I know they're going to get a lot of no's. And so what I will do is I do pay my agent. I give them $20. You don't have to do this, but I do it just because I appreciate the work they're doing for me, and I know it's a lot of work. I pay them $20 for every legitimate counteroffer that they receive back. So if they get a legitimate counteroffer, because what's going to happen is you're going to get some smart ass counteroffers back as well, where people will come back and they'll double the price. They'll take the terms, but they'll double the price on you or something like that. And they just think they're being cute, right? So those don't count. But a legitimate counteroffer that comes back, I'll give them $20. And then I'll give them $500 if the seller signs the contract. And now that I give them that $500, whether I'm going to close on the deal or not. Okay. And then obviously, if we do close, they get the commission as well. So it kind of keeps them motivated. It keeps them engaged. And I look at that. And when you kind of spread that out, it might sound like a lot, $500 for just an accepted offer. You're not going to get a bunch of those. So you just kind of look at that as your marketing expense. It's actually really, really affordable, and it's a great investment. Alrighty. Cool. So super. Yeah. So if you want to take this for a free spin in your market, go to propstreamepic.com. The link is in the description down below. And if you want to take advantage and get access to that 100% financing for the year of 2022, go ahead and go to epicchristmasgift.com, and for 80% off, you'll get full access to all of our trainings, this and so many other different creative strategies, and that'll all be available to you. Alrighty. So I'm going to sign off for today. I'm going to go enjoy the rest of my Saturday. You go enjoy the rest of yours, and I will see you back here soon. All right. Take care, y'all.